We're so happy to have you for this week's edition of Just Ask Freeman. Of course, this is brought to you by the amazing folks at Financial Sources, Inc. This is our leader, Freeman Owen Jr. We always say Just Ask Freeman because for more than 45 years, folks in Maryland, Virginia, D.C., and other states know to Just Ask Freeman. And I'm Rebecca Powers, a retired news anchor, and it is my pleasure to be here with this amazing gentleman. How are you this week?
Man, I tell you, I'm excited about everything.
You always are, Mr. Sunshine.
That's right. I got a chance to see my great-grandchildren.
Amazing.
Wow, that resonates. Great-grands.
Makes you feel old.
Not really. Still got a lot of energy because they just run me, the little great-grandson and my great-granddaughter. They are the apple of my eye, and I'm just proud of them. And just pleased as punch to reach this level of a great-grandchildren.
Yeah, amazing.
And might be able to, and I probably will, transfer wealth.
Amen.
To that generation, all right? But let's talk about retirement income.
Yes.
Let's discuss taxable accounts. Now, the thing is, we already pay taxes on money market accounts, savings accounts, even various accounts that have market risk. We pay taxes. I mean, you can't get away from it.
Yeah.
Even retiring, you can't retire from taxes. Now, let me give you a good example of what happens with a taxable account. Let's say there's been a lot of promotions lately about getting halfway decent interest rates on with CDs. All right. Now, let's say we have a $100,000 CD, and I'll be conservative. A nice 4% interest is applied to that CD, and 4% on the $100,000 purchase that you made. Let's get $4,000 in interest. All right.
You think it's $4,000 in interest.
You're getting $4,000 in interest, but you know what? It's tax time. So now you get a 1099. Mm-hmm. And let's say, for example, it's 24. I want to make it kind of easy on the calculation. It's 25% in taxes on that $4,000 of interest. Well, that's $1,000. What's the true rate of return?
Yeah.
You end up getting $3,000 for that taxable vehicle, which happened to be a CD, or if it was a money market. So you end up at $103,000 for that $100,000 taxable event there.
Yeah.
Well,
just doesn't make sense. There are smarter things you can do.
103. Now let's get 4%. Let's get 5% tax deferred.
We like that word.
All right. Now, the $103,000 you have. Okay. But first, let me do this. Let's get 5% on a $100,000 tax deferred account. Well, the interest earned is $5,000. There's no 1099 on that $5,000 of interest that you earn on a $100,000 vehicle. As a matter of fact, I can use a plain old fixed annuity.
Yeah.
Okay. Now let's go back to the $103,000. Let's get another 4%. So we're getting about 4% on $103K. Another $4,000, another 1099, which takes about $1,000 from that 103 plus the 4 minus about $1,000. So you're sitting on about $106K after 2 years. The tax-deferred account, you have $105K. Let's get 5% on $105,000. That's $5,100. So in the same time, tax deferral, approximately $111,000 in 2 years. All right, compared to a taxable event getting 4% on these CDs, which is approximately $106,000. So which would you rather have?
Right.
$106K or what's the figure? $111,000.
Right.
So tax deferral plays a big part in your retirement. And even though you're retired, you still pay taxes, but there's a way to get tax deferral on your nest egg. How do you do that? Just ask Freeman.
That's right.
Call us at 833-414-7233 or 833-414-SAFE. Claim your spot. There it is. QR code is there, and get a free consultation. Tax efficient plan. Notice I always talk about efficient plan.
Right.
Because even if you retire, you still have to pay taxes. All righty. But why pay a bunch of taxes, and you can minimize your taxes utilizing tax deferral? When I talk about tax-deferred accounts, contributions to employer-sponsored retirement accounts, pre-tax dollars, IRAs, pre-tax dollars, and to maintain tax deferral, even if you separate from service, why not do a direct rollover out from an employer-sponsored retirement account where you have no control and restrictions on distributions to your own individual retirement account? As a matter of fact, I have a book called The 10 IRA. You can see it. It usually pops up, the top 10 IRA mistakes and how to avoid the IRA, or I should say IRS, tax traps.
Right.
I like to give that copy of that text to my clients when they come through. All you have to do is just ask Freeman. Call us at 833-414-7233 or 833-414-SAFE. QR code is right there. Claim your spot. Claim it and get your free consultation. No obligation, free consultation. Tax efficient report. Social Security report so you know when to file, avoid costly mistakes, and maximize your Social Security benefits. You can maximize your assets utilizing tax deferral. So you need an expert. Just ask Freeman. Again, claim your spot. QR code is right there for you to get your tax efficient plan. Complimentary consultation that includes the tax efficient plan and the Social Security report, and guide you through and navigate you through a journey of peace of mind, sleeping well at night. Why? Because I have to be concerned about your retirement needs, carry you through and have you understand your taxable accounts, your tax deferred accounts, and how to get the distributions from those tax deferred accounts. And what happens if, since we're speaking of tax deferred accounts, with the Secure Act 2.0 now, there's a mandatory withdrawal from accounts that has been tax deferred, and we refer to them as required minimum distributions.
Can we pick up there in just a minute after this quick break?
Well, we're having fun.
Got to pay the bills.
We got to pay the bills.
But you're right, RMDs, that target has also moved. The federal government has changed that amount, or that age rather. Do you know that age? Do you understand how you can maximize your RMDs and do it the smarter way? Just ask Freeman. We'll be right back.
All right.
I just love what I do. I don't see it as a job. It is a wonderful opportunity to be able to help others, because I always say, if you do this, you get nothing back. But if you do this and give, blessings flow. First, I look out for their best interest. I ask a lot of questions in reference to their needs, their concerns, and they feel freely to discuss the particular financial services that I can offer them. But you might not have the financial literacy when it comes to wealth distribution, legacy, have guaranteed income for life, healthcare, all that good stuff, man, is there for me. I have knowledge of, and I can help the clients avoid big mistakes in the financial world and understand the concern that I have for them. There's no romance without finance.
Welcome back. As promised, we're going to continue our conversation about RMDs, required minimum distribution. The federal government is going to say, oh, you're fine. Just wait till you're in your 70s. You don't owe us any money now. But if you don't map that out in a written plan with you, Freeman,
Yeah.
it's the Wild West.
It's the Wild West because you can make terrible mistakes. There is a required minimum distribution. Let me give you sort of like a focus. If you were 70 and a half prior to January of 2020, you had started your what we call the required minimum distribution or a mandatory withdrawal from your tax qualified plans, the 401k, the TSP, IRAs, just to name a few. But what if you're 70 and a half after January of 2020? Well, the thing is, the required minimum distribution age was kicked down the road. The can was kicked down the road there to start taking RMDs now at age 73. All right? What if you miss taking that distribution from your tax qualified plan?
Big penalties, right?
Big penalty. As a matter of fact, it's a 50% penalty. That's why with the companies I deal with, what they do is notify my clients who are eligible for required minimum distributions. They have the market value of that IRA by December 31st of the prior year.
Nice.
Again, just ask Freeman so that you can avoid a costly mistake of missing the RMD, or you may get a package from your HR says, well, you don't have to take the required minimum distribution in the year you turn 73. Why not wait to the following year?
And owe us more taxes.
That's twice as that's a taxable event the following year. 2 of them. And that puts you in a higher tax bracket.
Wow.
Well, folks, if you really want to know how to receive your required minimum distributions and minimize the tax bite, what you do, just ask Freeman. Claim your spot. There's a QR code there and get a free consultation, tax-efficient plan, taking in consideration the required minimum distributions that you have to take. But I've got a solution where when it gets to the point where the percentage of the RMD matches, going back to the fixed index annuity, matches a percentage of growth in the fixed index annuity, you turn on the fixed index annuities, guaranteed income that would last longer than you, and then the RMD is satisfied for your entire life. That's just a few things.
Exactly. I was going to say there are so many things. It's like the inner workings of a watch. You know, all these pieces have to go perfectly to have the perfect timing. And that's what Freeman's passion is that all of your pieces are in the exact right place just for you. At the beginning of the show, you mentioned that you are a great-great-grandfather.
Well, not great-great. Am I a great-great?
Well, wait.
Yeah, I'm a great-grandfather.
You're a great-grandfather, sorry.
All
You're
righty.
a great-grandfather.
Well, my life expectancy may be that longer. I just don't know. I better just ask Freeman.
You're a great-grandfather.
Yes.
But the fixed index annuity is another opportunity for your legacy, for passing on things. Not only does it help save you in taxes, it's a great product because all they need is a death certificate at your passing, and the money is transferred, and the taxes are already paid, and you're out of probate court. I'm just mentioning why my family switched a lot of our money to the FIU.
Yeah, and let me share a little bit about that fixed index annuity. The rules have changed somewhat slightly when it comes to tax qualified plans or IRAs. There is spousal continuation. For example, I have my spouse, and I get guaranteed income from a fixed index annuity, which happens to be an IRA. I pass at 95. Spousal continuation.
She keeps getting that
That's right,
same
the
income.
same income. Or we have a joint payout from that fixed index annuity. However, when it comes to non-spouses, and this is going to be for another show, it's awesome. When it comes to our non-spouses, I mentioned my great-grandchildren. There is a 10-year rule because at one time, the non-spouses, and I know I have the knowledge on classification, whether or not that person is an eligible beneficiary from a tax-qualified plan or non-eligible. If they're non-eligible, let's say children, grandchildren, moms, dads, siblings, or whatever, every dime of that legacy that coming out of the tax-qualified plan, out of that IRA, or an employer-sponsored retirement account, must be liquidated with a zero balance. Are you ready for this? In 10 years.
Oh, wow.
There is no more payout to non-spouses over the life expectancy of our children, grandchildren, mom, dad, siblings. 10-year plan, 10-year rule, zero balance, or else there is a penalty.
Wow.
There are consequences if there is not a zero balance there in that 10th year.
You'd pay a big penalty on whatever money is in there.
That's right. And let's suppose you have children or grandchildren. They look at the amount that's there. They say, well, I'm going to give, let's say $100K.
Yeah. Let's say $1 million.
$1 million to my children. Nope.
You're not getting that.
They say, well, I like to give it to them. And they do, or they think about it. But if they wait till the 11th year, consequences. There's a penalty for not removing every dime that's in that tax qualified plan or in that IRA or that 401k or TSP. There's a big difference. And if they wait till the 11th year, the proper authorities would look over there and say, oh, taxation. We're going to get some money. And that's the way it works. That Secure Act 2.0 has changed distribution rules. Not only it's still intact for husband and wife to receive the benefits of what we call spousal continuation, coming from a fixed index annuity, as a matter of fact.
Yeah.
For the surviving spouse. Now,
yeah.
but the rules have changed, and we can get into a whole brand new show just on required minimum distribution, the distribution rules with the Secure Act. We'll cover that at some other time. But right now, let's talk about that annuity income, a portion of each payment.
Okay.
From a non-qualified account. Let's say you have an annuity, which is not an IRA. Well, there's a nice percentage. Most of the first out, what they call first in, first out, the tax-free portion comes out along with the interest from a non-qualified type of annuity, where 75, 80% of those funds that come out is excluded from federal taxes. So we could discuss that too. As a matter of fact, just ask Freeman about the various annuities and the tax consequences of not removing every dime from your tax-qualified plan and the penalties. But I've got a solution. Just ask Freeman. Claim your spot. There's a QR code there. Get your free consultation. Tax-efficient plan. I take pride in that because so many of my clients really enjoy the fact that I looked out for their best interest, concerned about taxes on the distribution of their nest egg and the years they put in of contributing to these 401ks and TSPs and 403bs and IRAs. We haven't even mentioned a Roth IRA. But again, folks, if you really want to know about the taxes that are assessed on your nest egg at all levels, 401k, TSP, IRAs, non-qualified plans, after-tax dollars, just ask Freeman and call us at 833-414-7233. And Rebecca, again, I repeat, claim your spot.
Absolutely.
That's all you got to claim your spot. There's a QR code there and get your tax-efficient plan. And I love the way you say, move away from the box. Hey, you got a person here that you can trust. And I built a big organization of clients, a big practice, of folks who have trusted me over 40 some odd years of quality service, taking care of you. And you know, I think we're about in And you know, the clock is rolling here. We're getting ready to take a break.
Yes, we are. And it's so important to realize if you don't have an in-writing plan for the rest of your life, that is what we feel the big box kind of misses out on, giving people that plan. So everything that we discuss on this show will be part of your personal in-writing plan by Freeman Owen Jr. All right, stay with us. We are talking about ways to save in taxes, when you should retire, and the benefits of maybe waiting. Stay with us.
We're frequently asked where we think tax rates are headed. Most experts agree tax rates will eventually have to go up as our federal debt increases. Without any changes, the government's current plan is set to expire in 2025. Every penny counts, especially in your retirement. Is your current plan efficient and optimized to reduce your tax obligation? Contact us today. Just Ask Freeman for a complimentary review. Reach us at 833-414-7233.
All right, Just Ask Freeman is the name of our show because thousands, probably tens of thousands of people have just asked Freeman over almost 50 years in financial services. You're a mathematician, you're a great-grandfather, you're a wonderful husband, you are a community leader. People don't understand about their retirement income needs. You have told me, Freeman, that so many people come in and say, am I ready to retire? I don't even know if I have enough. We're all in the same boat, so don't feel bad if that's how you are feeling right now. Am I ready? How do you figure out what a retirement income need is for that specific person?
Okay. You got to have a retirement income budget.
Okay.
That's why I say now, if you have $250,000, $500,000, or $1 million in these employer-sponsored retirement accounts or other income-producing assets, we're going to sit down and see how we can make these funds last longer than you. Housing. One of the I've heard folks, I asked them, I said, when we do the assessment, I said, is your mortgage paid off? Oh, no, we don't get a write-off. Yes, you do. You get a write-off. Here's how. All right. Let's say I'm going to take an example and try to make it brief. I'm paying $5,000 a month. I pay property taxes, homeowners insurance, and I pay, property taxes, the HOW, and we pay interest and principal. Now, let's say the principal and interest is half of that $5,000.
Okay.
Now, that's $2,500 per month. We multiply that by 12. That's $30,000. You know what? That $30,000 remains in your pocket. That's discretionary income. Over 10 years, that's a savings of $300,000.
Wow.
Now you have reduced that $5,000 a month down to $2,500 a month. We know property taxes probably will go up.
Yeah.
All right, and you got to have homeowners insurance. But again, Rebecca, we're not paying $2,500 more each month. Why? Because we paid the mortgage off.
So even if someone has a low interest rate right now, let's say 2.75, and they say, I don't want to pay it off, you still suggest hitting that principal hard and paying off sooner than later?
Yeah, because your life expectancy is longer. Okay, you paid a 2.5 and you are 65 and you got a 30-year fix. Now, I'm not an expert in the area, but look at the fact, if you got 2.5 and you're paying a 30-year mortgage, there's a 30-year mortgage payment. Well, you're out there at 95, still paying a mortgage.
That's true.
You know,
you're right.
There is a way to accelerate payments on your mortgage so that you have the peace of mind knowing that, hey, my home is paid for.
Right.
I got a nice write-off. That $30,000 you could utilize for what? You could travel, develop an educational program for your interest, family, and participate in various activities, give tithe. You could do so much with $2,500 a month. I know I can, and so can you. Just ask Freeman.
It's true.
Call us at 833-414-7233. Claim your spot, Rebecca. The QR code is right there, and get a complimentary consultation, absolutely free, See, this is what we call, that's why I like when you say a written tax plan.
Amen.
Know when to file for your Social Security. And we haven't even hit on some of the other aspects of developing a retirement income budget. And then there's other factors that we need to discuss, and we may have to carry that into the next show.
I think we will.
Yeah.
Into next week.
Exactly. That's exactly.
And I always hit on that written plan, because I can't tell you how great it feels. Even my 16-year-old daughter will take our binder off the shelves, say, oh, this is neat. By this age, you'll have this amount. Mm-hmm. Because if things change, you have a personal relationship with Freeman, so you can call and say, this has happened, or this has happened, and we need to pivot. You never mind when someone asks to change their plan a little. You do have to tweak it, and that's what I mean by personal relationship.
Exactly. That's right. And I'm able to do that. I've said that things like the last client, I helped him do a nice rollover. He had about $1.5 million, and we partitioned that into various guaranteed income programs, so that one is growing. We did a laddering effect. If you want to know more about that, claim your spot. There's a QR code there, and get a complimentary consultation. And again, we stepped away from the box. And he was very, very appreciative of the fact that when I said this to him, I said, now, I have a reputation. When you sneeze,
I'll hear it.
I got the Kleenex. So in other words, customer service is a premium.
Amen.
I mean, I know the changes I go through just trying to get through. Well, the line's busy, and I get a robot that answers. Mm-hmm. But again, we're closing in when I can see, man, I love it. When you have time, that time just goes so fast. So give us a call at 833-414-7233. That is 833-414-SAFE, and schedule a complimentary consultation. I tell you, folks, it's been a joy here, Rebecca. It closes out for another a good, solid financial literacy program, so our viewing audience can say, hey, man, we better just ask Freeman for our financial needs.
That's right. If you need a written plan, everything until you're 95, even 100 years old, Freeman is the one to do it for you. Again, use that QR code or give us a call and sit down with the amazing Freeman Owen Jr. We'll see you next week.